Hello everyone and welcome to this week's stock market analysis. I've brought up a chart here of the S&P 500 index, and before I get started on that though, I want to talk about this parabolic move we've been having. I've been posting videos in the past couple of weeks showing that this market should be selling off. We should get some sort of correction as we've been riding this thing higher, but it continues to defy me. It continues to just ride up and up and up and away. So I wanted to talk about what a good trader does in a market like this. A good trader rides the trend no matter what they believe, whether you know they have an opinion about the market or not. You need to make money on the market. The market's not going to give you anything. If you want it to go down, you can want it to go down, but if it doesn't, you got to react to it. So I have been making money as it's been going up, and how I've been doing that is with options. Like currently, I have S&P 500 puts in case the market goes down. And I am long calls on the NASDAQ in case it goes up. Because the NASDAQ has been a big beneficiary of this upside. The Russell's been the real big one, but I decided to do NASDAQ for other reasons that are too long to explain in this video. So that's that with how you can make money whether you believe it or not, because the market doesn't give anybody anything. So you got to take it. All right, so let's talk about this channel here. You can see we are still in it, which is absolutely amazing. Last Friday, this red candle here is last Friday, we closed below the channel and it looked like we were ready to sell or at least move sideways from there. And that didn't happen. Not even kind of. So we had a little bit of a sell-off on Monday, but it was pretty much rejected. And we rode this thing all the way back up. And we had follow-through all the way up, and we are back in the channel, which is amazing. And this channel I drew is pretty darn tight, so it's pretty amazing that we're in it. Some people drew it like out to here a little bit. I don't know if you can tell how I'm drawing that, but that's pretty amazing how resilient this market has been. So I want to show you some studies here that I've shown in the past, but there's one new one on here. But I'm going to show you just how overbought we are to just drive that home. We've got. We've been overbought since way back here, and we've been that way ever since. This is the stochastics that I brought up here, and this green line is the 80 level. Usually when this gets above 80 and we cross, it's time to come back down, and usually when we cross below 80, it's look out below. But that didn't happen when we crossed 80. We just turned back around and went right back up. Same here. We turned back around and went right back up. So we'll have to see where it pans out from here, but definitely not looking too pretty on the top side. So that's that. And now here's the RSI. This one's kind of interesting. You can see the RSI here is diverging. This is the trend line I drew before. The market's been going up, but this has been trending down. And this is a momentum overbought, oversold indicator as well. And this is this red line is the 70 level. When we go below that, that's usually a good sell indicator. But now we have a greater one. When there's a divergence here, we almost always break it down. But of course, it's been ignoring this divergence this whole way up. So we'll have to see where it goes from here too. Now we got the MACD to show you. It's another momentum oversold, overbought indicator. You can see we are not nearly as overbought. I'm sorry, we are not nearly as. We don't have the same amount of momentum that we had back here on these green bubbles. We've come off that momentum. We've just been floating around here. And actually every day this week was red in the momentum, meaning it's not really believable. It's just been kind of staggering down, but we continue to make new highs. So obviously we'll once again have to see how that plays out. So I want to bring up the money flow index here to show you what's actually going on. And the money flow doesn't show up for the S&P 500 index because it's an index. So let's show the ETF of the S&P 500, the spiders there. Okay, this is the money flow. You can see as the market's been going higher from here, the money flow has been going down right there. You can see that, when we came off the lows here, money flow came right back in soaring. Then once we hit a top of money flow, it's been going down. This is also a divergence, but this is an important divergence because this one is the flow of money coming into the market, or the flow of money in the market. I shouldn't say coming in. The flow of the money in the market. Obviously, we've been going up on no money flow. That means it's either been a short covering rally or just a lack of sellers in the market. So there's just buyers, basically. So that's the money flow. I'm actually going to overlay this money flow chart over the price so you can see what it looks like. It's pretty interesting. You can see where we hit our peak there. And you can see we've just been coming down ever since. So now this isn't the greatest indicator, but it's one you definitely need to watch, especially long term. This is a good one to watch. So definitely something to think about as far as money flow goes. So let's talk about the a little more stuff to complain about with the S&P 500. Here we have stocks that are trading at humongous PE ratios. Sears, Amazon, Baidu, Netflix. Some of these companies have 60, 80, 100, 150 PE ratios, and that's absolutely insane. I mean, that's ridiculous. I don't know how anybody would want to buy a stock at 100 PE ratio and think, oh yeah, it's time to buy. I don't understand that. We've made this mistake before where we thought valuations don't matter, but they matter. And when a market does what this market has done, when it goes up like this without going down, it's going to do the same thing on the way back down. It's going to go down without looking back. And these nobody likes these kinds of moves. So especially on the stocks that have these huge PE ratios, those ones are going to get slammed. And it's a sad thing to watch that happen again, but it happens. You know, people buy these things and they get overly excited about them. So that's that. I want to back out to the 3-year chart here. This is the October high, and these are the March lows here. And these vertical lines are the Fibonacci time ratios. I talk about that in a previous video, but what that is basically a time indicator when something will happen versus how, where we're going. This is a good indicator of when something will happen. And you can see we were coming up on an important level here of the 175%. And I said at the time we would probably go down from there because it's only made sense, but we have clearly spiked from that level. So I'm going to draw the Fibonacci time retracements on here to show you we are coming up on some huge support, because this market's not just gonna go up smoothly from here. It's got a lot of resistance. These back here, by the way, this is September of 2008. This is when all of those companies were going out of business, and you couldn't turn on the news without thinking that the economy itself was going to crumble and the United States as we knew it wasn't going to exist anymore. Could you imagine telling somebody back here that, oh, we're going to be right back to where we are now? Just hang in there, buddy. That person probably would have laughed at you, maybe punched you in the face, whatever it is. So it's pretty amazing that we're already pretty much back to where we were before all those companies went bankrupt. It's literally just amazing to me. I can't fathom it. But here's our big level of support, the 61.8 retracement, and that's at the 1226 level in the S&P. We are literally 9 points away from that right now. When we're that close to it, we're likely to test it. I mean, that's not that far. So we'll have to see what happens. We are, probably going to test it. We'll see what happens from here. Once again, I think we're going lower. It may not happen right away, but I'm positioned safely enough so that if it goes higher, I'm ready for it. So that's that. That's it for the week. I do update throughout the week on my blog, which is derivativejoe.blogspot.com. You can check that out to see all my trades that I did throughout the day. I do intraday trades there as well as longer term ones, such as the options that I spoke about earlier. And you can see that, get some market commentary every night instead of waiting every week for it. So if you're interested in that, it's derivativejoe.blogspot.com. And that's all for this week. Hopefully everyone goes out there and makes some money. And thank you very much. Bye-bye.